Hey everyone, Dan here. Before we get into it, if you enjoy these videos, please hit the like and subscribe button. It helps lots. And also keep in mind that these are my own thoughts, opinions, and ideas. These are not meant to be, nor should you take them as investment or trading advice in any way, shape, or form. Do your own due diligence, put in the work for yourself, and make your decisions based on that. Enjoy. All right, folks, here we are after market close on Tuesday, April 5th. We're going to take a look at OXY today. So Occidental Petroleum came up as a poll winner. I polled a few tickers and said, what do you want some analysis on? And this was one of the winners. Apologies for the screaming. What's new? This is how you know it's one of my videos. The Bob Ross of stocks plus children screaming in the background. The perfect mix. So taking a look at the daily on Oxy here, and I'm not going to pull it up, but I did take a look at the unusual whales, and at the moment it looks like the bull-bear split is pretty 50-50 on the options calls and puts. So take that for what you will. So I'm going to draw in some sort of patterns here because these stand out pretty prominently to me. So we'll toss these in now. So here's a large wedge that's forming, and then there's going to be a more immediate wedge that's forming here. Get my 5103 in here, and sometimes I sort of prepare these and sometimes I don't, and the reason for that is when I don't, it's to hopefully just sort of like show how the sausage is made for people that are like, where do you get these levels? How are you drawing these in? Where are you basing these things on? So sometimes I think doing it live is nice for the video off of a clean chart so that folks can see where I'm looking to put things in. So obviously back here you see just sort of like with your naked eye on the daily charts, you can see, or daily candlesticks, you can see these repeated support levels on its way up here, right? And so that's where I go in and I throw a ray in there, and then putting in a couple of trend line here. You can see the same thing here, right? It's repeatedly making higher lows, but it's doing it in a systematic way that's sort of following a pattern, right? So this predictable uptrend support. And then same thing here. Now this is a little bit less certain in my opinion. Here you basically have 3 or 4, maybe even more candles that are upholding this trend. Same thing here. You have about, say, 4 or 5 candles that are upholding this trend. Now here you just have 2. I prefer to have at least 3. So it's sort of like, because just 2 will just set the markers, right? It says, okay, this one aligns with this one here. But then there's not that confirmation candle. So that's what I like to look for. So this one, to me, this downtrend resistance could definitely move. Say tomorrow we get something come out of here, that might not mean that it's breaking this wedge. That might just mean that this ends up here. Or something like that. But so take this downtrend resistance with a grain of salt, in my opinion, at the moment, just because I want that third confirmation candle in there. That said, if this does continue to play out, it's already pretty tight, and this wedge break would come sometime in the next week and a half or so, maybe by the end of next week or the following Monday, because I think 4/14 is the end of next week, if I'm not mistaken. So this will sort of tell us what it's going to do relatively soon. Now, if it breaks to the downside, what I look for it to do is a couple of things. One, I'm going to throw in a support level right around here. You see this brief consolidation. There's a couple of days here, but you see this wick aligning pretty well with these candles, and then the lower wick here where it had this huge up day, right, 17.5%. But I'd look for a strong support right around 48.12 there. If it does break down. The other level that you might catch before then, even though it's to the downside, but it's quite a bit of room here. You see this support and this resistance, support acting also as resistance. So 54.36 might give you really near in supports, and if that can't hold, you might have another sort of intermediary level here, right around $51.98, $52 might play the more psychological zone, 52. And if not, then you might be looking at, somewhere around the $48 level or like a break below 50. So that's what I'd be looking for support levels to the downside. If it breaks up, mostly I'm not concerned about it until it actually breaks out of this wedge, right? That to me is what's interesting. So I'm going to target levels above there. So right here around the 59.50 level could get really sticky. And then, there's a lot of wicking just sort of like in a range here, but, we can put it on sort of like try to cut the difference there and put it generally in the middle. But in the high 62 range is also looking, pretty strong for a resistance level to the upside. So that's what I'm mostly looking for. What's it going to do in this wedge? And if it loses this one, then, consider it being in this broader wedge, but also consider these potential support levels within that. And then if it does break to the upside, I wouldn't immediately consider that as a clean wedge break. I'd say, okay, that might be just forming a bit of a broader wedge. I'd be really interested to see if with that wedge break, it's able to make a strong move and get support over this 59.50 level and or make a run in an attempt at that high 62, $63 level. So that's mostly what I'm looking for on that side of things. We want to pull in some of the EMAs here. Oh boy. You see it consolidating along these 5 and 12 EMAs at the moment. Now, it wouldn't be unheard of for it to drop down and test that 34 EMA and still stay in a very sort of bullish formation, bullish pattern. But that would bring it all the way down to about, by the time it got there, probably 53.50 level, something like that. So don't be shocked if it comes down and plays with that and see if it wants to withhold this uptrend or not. On the MAs, this is stretched at this point. These longer term MAs that I have on here, it's as well above any of these 50, 180, or 200s. Of course, want to grab the Ichimoku cloud just to have a look. Still in a bullish formation here. The support level, if it can hold through here, through this wedge, the support gets really thick and really high. So the strength of the support dictated by the sort of area of the cloud, right? And so you see it gets thicker here than it was here, obviously, and you see it's inching upwards. So that support that the cloud would bring, like you saw it play out here, right? Breaks through, comes down, and essentially wicks off of the cloud there, and then continues back up. And that support is getting higher and higher and higher. So if it can make it through the next few weeks, and make it into the beginning of May, it has cloud support here up, above $54, which, could be a promising sign. But, to the degree to which you put much into account for Ichimoku clouds, I know different people have different strategies and different, indicators and what have you that they deem to be, I guess, more consistent or less consistent. But those are the patterns, those are the trends that I'm looking at for Oxy at the moment. And it'll be interesting to see. Obviously, it's putting in a bit of a consolidation point here, which we've seen it do briefly in the past several times, right? It's a very nice bull flag here, and then breakouts, and even here, very nice retracement, bull retracement here, and then breakout. So we'll see if it can continue on that path, or if it's sort of like getting stretched a bit too thin, getting a bit too big for its britches, if you will. We'll see. We should know something soon enough. All right, folks, I hope your trading week is off to a good start. And as always, I appreciate you watching, and I will see you in the next video.